What is up, all my investors? It is Shaddai, and I'm back again with another Shinance video to break down the complex financial world for everyday people like me and you so we can get to this money, this cheddar, just a little bit more smoothly. Today, we're talking about the bank test. Very important, eye-opening details that you should be paying attention to, especially if you don't even know what the bank stress test is. Make sure you watch every single little detail of this video so you don't miss out. And if you have any questions, let me know in the comments below. Before we get into all the good things, I got to show my appreciation to you for watching. Thank you from the bottom of my heart. I wish I could kiss you in your forehead, a nice juicy kiss, nice juicy fat lips, and just a nice forehead kiss just for you showing support. Don't forget to hit the thumbs up on this video, comment, say what's up in the comment section below. Shout out to all my people from the Discord chat, future millionaires. We are in the building. Now, the banks passed their market crash test of 55%. All right, what's the bank stress test? Well, the federal government creates these hypothetical scenarios and tests the banks based off how much they have in reserves, what would happen if they lost X amount of billions of dollars, how much money would they then have, could they handle it, could they not? That's kind of what it's obviously more detailed than that, but just a compacted version. It's like a test. It's like me testing to see how much I can piss you off before you scream at me, right? Very simple. 23 institutions had entered the test, and the market conditions were very interesting. It was a recession, global recession, a focus on very bad downturn on commercial real estate, and 10% unemployment, which we're probably almost near there right now, which is very interesting, right? We're maybe in a recession, very interesting. 55%, let me, 55% drop in the stock market. I know a lot of y'all would probably have the biggest doo-doo come out your butt if the stock market dropped 55% tomorrow. I know I wouldn't be a happy camper, but I would definitely be ready to create audibles and start moving and start making moves and do what I got to do. I'm ready for that type of movement. I wasn't ready my first year, but I'm ready now. But yeah, that was the hypothetical scenario. 23 institutions, everybody passed. Everybody did well. Everybody was above their threshold number that they have to have. So they have that stress capital buffer that they need to stay above. So pretty much going forward, the banks know, all right, if the stock market loses 55% and we had 1 trillion on demand, well, anything we make, and we was, they applauded us as being very well positioned to only 1 trillion. Well, if we have 2 trillion, that means we can do a whole trillion in buyback, stock buybacks, or investing, or capital, or whatever. And I'm just throwing numbers out there, obviously. I don't know how much money they have in reserve specifically right now as I'm making this video, but pretty much if they stay above that threshold, they can do whatever they really want when it comes to stock buybacks or just paying dividends out to the people who've been investing in their company. I think that this creates a major opportunity to invest in the financial sector. And this also tells us that banks won out of this whole pandemic. They pretty much prepped up the banks for the recession because they know it's coming. I know it's coming. We know it's coming. We got saved by the 5 trillion that was printed, but let's say if that wasn't printed, we would be going through that recession right now. So I think that what the feds did was they prepped the banks up and the financial industry up to be ready for what's to come down the road. I think that they're giving us a hint here. I don't think that it's a coincidence that they picked 55%. These numbers have been floating to 50%, 80%. These numbers have been floating around by a handful of analysts and market predictors. So I think that there's something looming that they may be like, ooh, it may be coming, maybe on its way. Worst case scenario, at least if the banks can still hold on, we can still get money out to the people. Credit doesn't have to be shrunkened up, and we can maybe adjust from there. So pay very close attention. Invest in bank stocks if you think that this fits you. Do your due diligence, though. I'm not a financial advisor. I just want to point these things out to you. They passed the test of 55% stock market correction. That's an interesting one. So do your due diligence. I'm going to finish this video off by saying, if you're interested in joining the investor group chat on Discord that we have going on right now, shoot me a DM above. I will get you all the details to join. It's free. I'm not selling you anything. We're just a group of investors looking to build generational wealth through sharing resources and having daily financial conversations. Very important, y'all. Very important. Excuse me. Very important. So if this is something that fits you, shoot me a DM above. I will get you all the details to join. I appreciate you watching. Have a great rest of your day. I'll check y'all out tomorrow.
Follow me on Instagram at shaddaipenamgmt.